Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I am Matt.
I'm Taylor.
And I'm Rabih.
Boom, guys, we got it. Excited to be here. We're going to jump right in. We have got labor market update. We've got 529 improvements. We didn't hit this last time, so this is a hangover from last week. And then we've got what retirement looks like in America, brought to you by our very own Taylor Sutterfield. Rabih, let's jump in. You were telling me earlier this story, this incredible narrative you've created around this. I am so excited. Tell us about the labor market and what's going on.
Yes. So this week was a very boring week in financial markets, whether it was stocks and bonds. And during times where there aren't new information coming into my mind that I have to process, I like to take a step back, look at, the bigger picture, try to make sense out of it and see where we stand. And I thought I would share what I was working on this week with everyone on the podcast. And let's look at the labor market. And the reason I chose the labor market is because the Federal Reserve, in all of their latest communication, has been saying that inflation is still due to pressure and imbalances between supply and demand of labor. And what we've been saying is that for the past couple of months, unemployment rate has been fluctuating between like 3.5% to 3.8%. And this is where it's staying. And I was like, okay, I can't gain any insights from here. So let me dig deep into the data, see where that 3.8 is coming from, and understand what might change it. Because a resolution in the labor market imbalance is going to cause a resolution from inflation and move this economy forward. That was, the train of thought I was following. So I prepared some data, and I'm going to tell you what we have collected so far. So let's start with the total population of the US. So how much do you think we are at right now, by the way?
360 million people.
Taylor, any guess? Without cheating and looking at the report.
I want to cheat.
I would assume 375.
375. Well, you guys are like 40 million, overshooting by like 40 million. Current population data as of the beginning of this year, so it's like 9 months delayed, right, is 333,287,557, and they're changing every second, I'm guessing. So we're at 333 million. And if we want to know how many people are employed in the economy, we'll actually have to take out of this total population the working age population, which means we're only going to look at people between the ages of 18 and 65. And out of the 333 million, only 208 million people fall into that category, which puts a participation rate of 62.6%, which also has been, it dropped during COVID, but has been flat between 62.3 and 62.8 in the last 7 months of this year. So out of 333 million, 208 are eligible to actually work. They might be working, they might be unemployed, they might just be people who decided not to want to work. So out of the 208 million, people who are actually employed and people who are unemployed but searching for a job are 166 million. So actually, if you think about it, out of the total population of 333 million, only half of them, around 166 million, are people who are either employed or are actually looking for employment. And if you split that 166 million between the employed and unemployed, we have 160,900,000 something that are employed, and around 5.95 million people who are unemployed in our economy. This 5.95 is the 3.5% unemployment rate that we always look at. So in my mind, I was like, okay, 3.6 doesn't tell me much, but now I know that there are 5.9 people in the US who are actively seeking and looking for a job, but can't find a job. And in my mind, okay, how does this create pressure on prices? How does this create an imbalance in the labor market? This is the supply of labor, right? In the market, you have 5 million people, 5.9 million people can't find a job. This is the supply. Let's now look at the demand and see how many jobs are available for those 5.9 million people and see whether they match or not. And for that, I went to something called the job openings. And the job openings in 2022 skyrocketed. And at the beginning of this year, 2023, we had 10.5 million jobs available in the US economy. But because the Fed has been increasing interest rates and slowing down the economy, those available job openings, which are literally openings you are going to be finding on company websites everywhere trying to hire, have been decreasing. And they've been decreasing at a pace of like 240,000 jobs each month are being filled. So as of currently, we have 8,156,000 jobs available. So we're looking at an economy where you got 8 million jobs available and 5.9 million people unemployed. And because of this, there is an imbalance. Just to give you a side note, there's never going to be a situation where everyone who is unemployed are going to find a job. There's going to always be a mismatch due to a shift in like the skills that the people who are searching for jobs have versus the skill that the job requires. We're talking about,
we're basically as low as you can get right now, right? You're not getting to 0%.
You're getting the lowest you can, and that's why it's been stuck at 3.5. And simply think of it demographically. Maybe all these new job openings are in tech and they require coders, and people in their 50s and 60s never got that education, can't service that job. Or taxi drivers versus, I don't know, the people who program the Uber app. There are different skill sets, so you can't always fill that gap. And we call this the natural level of unemployment. And it's been at 5 million people. So what's interesting is if we like zoom out back again, you've got 8 million jobs available and 5.9 million people unemployed. And with that, every single month, the economy, because it's been growing, it's been healthy, it's been adding around between 300 and 400,000 jobs each month. So in addition to those available 8,000, there is 300 to 4,000 jobs being added every single month, but they can be removed from the unemployment. And so far, just until the end of this year, 1.7 million jobs have been added. So the available jobs started at 10 million, dropped to 8 million. It wasn't just a smooth way downwards. It was actually a fluctuations of new jobs being added and people taking these jobs. And as this dynamic happened, I wanted to know, okay, so what's the history between how many jobs are available in the economy and how many people are unemployed? And I just showed Matt this chart and found fascinating. Since the year 2000, the number of unemployed people in the economy has always been bigger than the amounts of jobs available in the economy. So,
which makes sense, which totally makes sense.
Yeah, so like in 2004, to give you an example, we had 8.8 million people unemployed, but we only had 3 million jobs available. In 2010, after the recession, we had 15 million people unemployed, but only 3 million job openings. And this trend where unemployment was always bigger than job openings stayed all the way the same until slightly in 2018, and then exploded after the pandemic, where we are in a position where we have more job openings than unemployment level. And what's interesting, actually, let me share this for people on the Facebook. So what's interesting is that for the labor market pressure to ease and the impact this has on inflation to ease, we need actually to go back to the old regime where you had more people unemployed than there are actual job openings. There has been a positive trend since the beginning of the year, right, where the number of job openings has been going lower, but this is still not enough to ease the inflation that's coming from the labor market, which I found it very interesting. I wanted to share.
Yeah, just obviously this is pretty intuitive, right? People have jobs, they feel stable, they spend money. 70% of the US economy is spending. So it's pretty intuitive until the job, and to your point, Rabih, the job market, it's softening, right? It's softening, but I look at that chart and it's like, there's such a gap between the gap grew so much over the last 2 years where the job openings were so much greater than the people looking for jobs. that even though it's been softening, it's a long process to get it back to quote unquote normal. The other thing that I think is interesting, I've never thought about, Rabih, that when we talk about the labor for, unemployment and all that, it just hit me. And you're probably thinking like, well, duh, yeah, you're an idiot, of course. But when you look at the total population, 330 million plus, and then the actual people working, and then you look at the unemployment rate, those numbers that you just broke down, if you take the actual number of people unemployed by the total population, there's less than 2%. There's only 1.78% of people, right? Based on total population that are
divided by
that don't have a
303
job.
million. Yeah.
Yeah. Which I don't know. I've just never thought of it like that. That if you think of the actual like total population, including children and people that are retired, only 1.8% of the population are looking for jobs. So
the US is not the number one economy for no reason. It's pretty damn, very efficient economy where every resources are being allocated, whether it was financial resources or human resources. Yeah, it's interesting.
And I just think how far we have to go. And again, this could happen quickly. I totally admit that it could happen quickly. But all the narrative around a recession, it's like, no, it's actually the opposite right now. The US economy is so strong based on these numbers that, and again, the labor market being so connected to spending and the full basically driver of the US economy being consumerism, as long as the job market is strong, we're not getting a recession. It's pretty simple.
Although the Fed is working actively to slow it down so they can control inflation. So
they're doing their best. They're doing their best.
It's going to be a matter of time.
Yeah. Taylor, any thoughts on that at all?
No, I think it'll be interesting. I mean, this is going to lead into my topic, but one of the charts in my article was
let's go to it. Let's jump to
graphing. Okay, so my article really, it's just, here's what retirement looks like in America in 6 charts. And it basically is comparing, people love to compare themselves, right? And that's why I thought this would be interesting, is show you how you're doing compared to the average American. And so one of those charts
I compare myself to everybody except for Rabih, because I'll never win that one.
Well, Rabih's not average, so you're not comparing.
Just word to the wise: don't compare yourself to Rabih.
It's not apples to apples.
One of these
apple in the box.
One of these 6 charts was just graphing, the percentage of Americans that are over the age of 65. And in 1950, that was around 7%. But in 2023, we are up over around 17, close to 18%. And it's projected by 2030 that more than 1 in 5, so over 20% of Americans will be over the age of 65. So this is just contributing. Yeah. We have an aging population. We have less people that are, more people retire, less people working. And so that, it was just interesting to hear, we've got 330 million, but only 167 are actually in the workplace or want to be working.
Yep.
Which is pretty, I mean, that's just crazy to me that only about half of people that you see are working.
Yeah. And can lead, and that's a problem, right? Like there's a lot of talk about this of an aging population. Not only that, but tell me if I'm wrong, Rabih, maybe you know off the top of your head, but the number of people having children is going down, right? That, which is very normal. The more mature an economy gets, the more wealthy an economy gets. History shows that the less kids people have. I'll let you I'll let you decide.
No, what you said what you said is 100% right. And this is actually a problem Europe is facing, where they are in an aging population. You've got more people working than people who are retired. And it's been very hard to sustain, the social benefits that they provide for these elderlies from an economic standpoint. And unlike Europe, actually, the US is in a better position, not because US is popping more babies than Europe, no, but because the US has better immigration procedures. And, I'm an immigrant who get to this country, and I know many other immigrants would love to come and work in the US. And the fact that there is immigration in this country created a positive net inflow of labor into the market. So out of these 166 million that are working, the fact that they might not be making more children for the future, there is an inflow that's keeping population growth positive. That is gonna somehow make the challenge of an aging population easier with time. this is how much as I can talk about it from an economic perspective without it becoming political. But if you can't, you need labor. If you can't make babies to sustain that labor and service the aging population, you have to bring labor somewhere else, or else you have more in spending on the elderly than inflow and income from tax revenues from the people who are actually working.
Yeah, and those are only two places it comes from, right? It's like having kids, right, to replace the adults as they age, or like you said, meaning at the country, your individual country level, or having immigration. And again, we're not getting political here. Truly, we're not. We're just saying factually, those are only two places the labor force comes from. Or I guess if you want to add a third, which is the big topic for everyone, topic for another day, but AI, like technology, innovation, replacing labor, human labor with technology. Taylor, what else on that? Just while we're on that topic, any other charts that were interesting on that as far as what retirement looks like in America?
Yeah, I mean, there were others that were pretty straightforward, just talking about average retirement savings. And we talked about this before, so I don't think we can spend a ton of time on those. But the average retirement savings for someone 65 or older was like 407, so just over 400 grand. To give you an idea of what 400 grand is, if you want to live off that in perpetuity using the 4% rule, you can spend about $1,300 a month on 400 grand, right?
Let's just say that most dentists are not, you're not doing that. You're going to need more than 400 grand, my friend.
We hope so. We hope so. Medium household net worth 65 was 266. So again, 400,000 in investment accounts, but you still have some debts. So your net worth overall is a little bit less on average. But the thing that I found interesting, if we don't have a large net worth, well, what are people living off of? It kind of ties into this conversation we're having. It's Social Security, it's social benefits that the labor force is going to directly influence. But the average benefit of Americans, what would you venture a guess, Matt, is the average benefit?
For Social Security?
Of people collecting Social Security right now.
Oh, okay.
Like the average dollar amount you're saying?
Yes. On a monthly basis.
On a monthly basis. I'm going to guess the average benefit is somewhere around $3,000 a month.
Are we talking single or like a household of two people receiving Social Security?
We are just talking a single benefit, the average benefit.
I'll go down a little bit. I'll say 2,500.
Yeah, I'd say 2,500.
So $1,825 average benefit.
Wow. Yeah.
Right.
Yeah.
So that was kind of, average person, 1,825 Social Security. Then you've got the average account at 400,000. So maybe
$1,300 a month,
$1,300. So we're talking $3,100 a month in spending. And then it talked about the average healthcare expense. So this one was annual healthcare expense on average for someone 65 was $7,000 a year, or about $580 a month. So
wow.
You're getting $1,800 a month in Social Security, and about $600 is going to medical expenses. So you're really only getting $1,200 a month net from Social Security after your medical expenses.
Yeah. And I will tell you, I hear that and it just blows me away mainly. And I totally admit that my mind is so biased and skewed towards working with, let's be honest, the highest earners in America from a profession standpoint is dentists. So when we look at the numbers of our clients, like those numbers seem so low, because they are, again, compared to our clients and the dentists we talk to all over the country. I can tell you right now, based on our experience, like there's not a dentist out there that's going to be able to retire and sustain their lifestyle at 400 or 500 grand in investments.
And this along
times
these
that by
lines,
10,
Matt,
basically.
Yeah, along these lines, I was thinking, we're biased not only because we have dentists that we work with that earn a really good income and can save, but we're also working with proactive dentists. Right. For them to have found us, we don't do a ton of outbound marketing and calls like some other financial advising firms who beg for referrals from people and kind of do that. We're very like, hey, we have this education. This is what we do. And organically, we have people call in, but those people who are calling in are only the proactive types. So
Yep.
we're getting the people who are proactive and are, reaching out to us early on in their careers and making changes and changing the trajectory of their future. But I've also had, they're kind of sad prospect calls with dentists who have worked their entire careers and they're coming to the end of their career. And it's kind of like, can you help me? Right. And they're way behind the 8 ball and they're in closer and
This
similar
position.
situations to this position.
Yeah. Yeah.
Right. And to me, it's just a reminder, like, don't wait. All right. Get started. You
Yeah.
do not want to be the average American. Do not do what the average American is doing.
Yeah.
And that was like
Don't,
one of the biggest.
the message is
biggest
don't be average. Don't be average.
Right. And
Yeah.
then the other thing here that I wanted to touch on, and this was like this was the sixth graph, and this didn't have to do with money. This had to do with just how retirees spend their days. And it broke it out in hours, like hours per day. So there's 24 total hours on average, what do retirees spend their time doing? And there's
18 of them, they're sleeping. They're sleeping.
18. So not 18, but 19.01 hours are spent sleeping. So that was number one. Can you guys guess 2 and 3?
Playing bingo.
Entertainment. Yeah, just
Yeah, I
entertainment.
would hope that arts and
Gardening.
entertainment were there. But number one outside of sleeping was relaxing and leisure for 6.2 hours a day.
That's the same as sleeping. No,
I don't know. This is the thing that's
Taylor, how
confusing.
many hours did you say they're sleeping? How many hours?
9 hours.
Oh, I thought you said 19. And I was like,
No.
I was joking with my 18, but you said it was more. Okay, nine
So
9 hours.
9 hours, then 6.24 hours relaxing and leisure. And that's not with people, and that's not doing an activity. This is just lounging around, 6.24 hours. And then can you guess what the next highest thing was?
I still want to say bingo for some reason, but
It's the first part of Netflix and chill, right? It's
just
4.5
watching
hours
TV.
watching TV.
Whoa.
yeah,
So
would
I was-
pretty be surprised if they're Netflix and chilling. That you just say.
No,
Yes.
they're Netflix and chilling, but just their version. They don't know they don't know what it actually means. They're just actually chilling. Yeah.
So yeah, that's what I'm saying. Like they're watching TV and they're just chilling, right? We're talking 9 hours sleeping, 6.2 hours relaxing, 4.5 hours of television. If you add all that up, that's 20 hours of the day spent either sleeping, relaxing, or watching television,
Wow.
right? The next thing was eating and drinking, which was 1.5 hours. So we're talking 21 hours. And the next highest thing on this list was grooming at 0.6. Then we get to reading at 0.5 and socializing and communicating. Just socializing and communicating was 0.5 hours. So
Wow.
30 minutes a day spent socializing or talking to other people. And then participating in sports and exercise, 0.29 hours. Arts and entertainment, 0.05 hours. And this one was like really the most mind-boggling. And the whole point of this article was showing not only is like saving and investing for your future an important thing, but if you don't have the funds to do much else, then sit and relax and watch television, right?
Totally.
So all of this, the whole point of this article and like the call to action of this article was, hey, if you keep being the average American and if you don't do these things, you're going to get to retirement and you're going to basically spend all of your days in retirement relaxing and leisure and watching television,
Not being able to do anything.
and not being able to do much, right?
Well-
And their point was don't just invest, also invest in hobbies and relationships. And then it talked about relationships being every bit the investment that your money should be. Like you have to spend time and effort on relationships. Otherwise, you're going to get back like the average American, only spend 30 minutes a day socializing and communicating.
I was literally just going to say that, Taylor. I just had a conversation with my dad this morning, who's recently slowly transitioned into retirement. He is a fortunate one from a financial standpoint where he's not in the boat. Like he's financially independent. He's not worried about finances or money, which is good. But that came at the cost for him specifically or the cost is he doesn't have a ton of friends. He didn't invest in a ton of hobbies. Like he'll be the first one to tell you this. So even though he's financially independent, he can do pretty much anything he wants financially. I called him this morning on my way to the office, and he was talking about how bored he is and how he doesn't have much, and he's trying to fill his days with stuff. But it's to that point, Taylor, like the investments go further than just financial. You need to be investing in especially relationships, friends, and hobbies with friends and things, and this will be a topic for another day. We should definitely do like a long form podcast on this, of the risks in retirement that go beyond money, like the loneliness factor and the loss of purpose, the loss of your social circles when you retire. Like that's a lot of stuff people don't think about when it comes to retirement. That again, we should spend a lot more time talking about this on another podcast for sure. Rabih, your mind's turning on this one.
No, it's just a hit too close to home, right? And yeah, I'm thinking of how hard that point in life can be, and adopting a more general approach where I want my last couple of years to be the best they can be, instead of thinking about it in terms of I want my last couple of years to solve my financial problem, is a better way. There is more than one problem in retirement, and make sure that it all fits in the bigger picture.
Yeah, I'm with you. This one hits close to home as well. But this is where we say to people, like, financial planning done the right way is about focusing on the meaningful moments along the way while also planning for the future. A lot of times people, I think, take an approach of one or the other. Like we've seen a risk of people like squirreling away every dime. They get so focused on the savings and investing and getting to a place where they're financially independent that they look back and they're like, I didn't even enjoy my time doing this. And now, great, I'm retired. I've got all the time in the world, but like you either get sick or it's not what you thought or whatever. It's not, you got to enjoy those moments along the way. So that's what we focus on a lot. Guys, are we going to kick 529s to next week again? Are we going to do it? We're up against the gun here. We're up against the clock. I'll leave it to you. What do you think? Do we hit 529 improvements, or should we push it to next week? Should we just tease this 2 weeks in a row? What say ye?
Let's tease it. Why not?
We're going to tease it. We're going to do one more week.
Time.
One more week, 529 improvements. It's the most exciting topic you can imagine. So we're going to do one more week.
I would say this is, I think that it does deserve its own shine, right? I think that there is some significant changes here that reserve some like, hey, let's not just mention this as a throwaway at the end, because I was reading through everything you pointed out on your kind of list before that we were going to talk about. And I think all of these are worth spending some time on.
Okay, so here's what we're going to do. Next week, we are going to lead with 529s. Rabih, we're going to take we're going to steal your thunder with the market and economy update. We're going to lead with 529s because it gets to a point. You do it 2 weeks in a row, that's okay. You do it 3, we start getting people at the fence with their swords and things. Swords, I don't know why I said that. People are going to be mad. So we're going to end it there. Thank you, Taylor. Thank you, Rabih. If you're listening live, we appreciate it. If you're listening over the weekend on the podcast, we appreciate you so much. As always, that was our 2 cents. We will see you next week.